trading become more easier once you stop chasing candles and start understanding delivery. Now, in my last video, you get to learn the fair value gap, which is the FVG. Then you also learn the breaker block, how the market trap traders at a failed level. In this video, guys, we're going to be putting everything together because this is my type 2 entry model. The continuation setup I personally use on gold to align with a strong momentum in the market that's going to give you a precise entry. Now, I want you to understand that this setup is not random. Every part of it has a purpose: the imbalance, the trap, and also the continuation. And once you get to understand these concepts, you'll stop chasing candlesticks in the market and start understanding delivery. Now, let me break it down for you on the whiteboard. Previously, we spoke about the fair value gap, which is an FVG, right? We also talked about the breaker block, which is BB. So coming up on the chart, first off, you're going to see that on a bearish scenario, the market is going to give you one of your favorite break of market structure like this in the market, okay? And it's going to left out a bullish order block right here. Now, this bullish order block is where you want to buy the market whenever price come here. But with this system, you're only waiting for it to fail. Now you're going to have a little bit of retracement, which is a reaction rather, and the market is going to fail that level. Now, as the market is failing the level instantly, it's going to print a fair value gap right here, which is an FVG. Why would the market print a fair value gap in such kind of situation? Now, let me explain that for you. Big boys in the market, because obviously there are big players, there are people that have a lot of money in this market. Now, when they get to see that a lot of people are placing a buy positions around here, they want to go against their own buyers, not literally going against you, but basically going for liquidity. Now, you're going to see that once you have this little bit of retracement is where the small boys are putting in their buy position, maybe $2 million, $3 million for the market to be able to go a little bit further. But when the big boys come with billions of dollars into the market, remember this market is $1 trillion market every single day. Once those big boys come into the market, they're going to pump the market to continue the downtrend. When they pump that money, you're going to see that a candlestick is going to move extremely fast, which is going to print a fair value gap right there. So whenever you see a very big candle, you should get to understood that this candle is a liquidity candle. Why am I saying much about fair value gap? I already make a video about it. So just use the link that will be popping in this video to go watch that fair value gap. Now, once you get to see the fair value gap happens right here, and I want to take the continuation to the downside using my type 2 entry model, you're going to wait for one thing called liquidity. And liquidity is something that I'm going to go extremely deep into on my next video, okay? Now, all you have to wait right here is for market to give you areas of liquidity, okay? It's not a point, it's an area. And the market is going to tap into your fair value gap. And that's exactly where your short entry will come in, okay? This type of setup was what I used to eat in the market last week. Use the link in the description down below and go join the Pound Trader Telegram community. You will see that the last trade that we took was exactly this setup we used to milk the market last week on gold. Now, this is on a bearish scenario. Let me go on the bullish scenario. So on the bullish scenario, you just have to flip the coin. Okay, so the market will give you this favorite break of market structure to the downside that a lot of you are familiarized with. And this is a break of market structure, and this is a bearish order block right here that you're anticipating for the market to come back to for you to start selling. But in this case, the market is going to give you a little bit of reaction, but fail that level. As soon as the market is failing that level, it's taking out liquidity around this region. It's going to print a very big fair value gap right there, telling you that institutions are really interested in that area, okay? So now the fair value gap should be around somewhere here. You get to mark it out, convert it to be an FVG, and all you have to wait for, liquidity. You don't just take it blindly, okay? That's what is going to make this thing to be very, very valid. Like I said, I'm going to go deep into it on my next video. Liquidity generated around this region and market, tap into your fair value gap right there, and you open a buy position around here. Then your take profit should be maybe to the moon or to the sky, whatever place that you want to place your take profit. Now, since we get to break this down on the whiteboard, this is just a painted scenario. Let me walk you straight into the charts and show you the trades that I took with such kind of setup in the gold market. These are trades that I took on the gold market using what I just explained to you guys on the whiteboard. Okay, this is my continuation entry model, which is a type 2 entry model. Okay, because I already shared the type 1 entry model. Now, talking about this type 2 entry model, guys, all you have to do, just like I said on the whiteboard, wait out for an area that will fade. Okay, that is why I call it a flip zone. You can call it flip zone, breaker block, or fade level, whatever name you want to give to it. But this is an area that a lot of people wants to buy this market. A lot of positions going against the people that could not hold the market around here. You can see how he left out a strong fair value gap here, which we get to connote to be an FVG, and we saw a liquidity right here, which validates the setup. And instantly we took our short position and the market dropped to the downside. Now we also see another opportunity right here. Okay, this is also a point that a lot of people wants to buy the market, because I mean, this, some people call it, this is a sweep, this is a break of market structure, this is a liquidity. They'll want to buy from this bullish order block right here, and the market just failed them instantly and left out a fair value gap immediately. Now, for it to be validated, you get to see a liquidity, either generated liquidity or structural liquidity. Now, after then, we saw a break of market structure, and the market came back there, filling the orders and distribute to the downside. So this is a very, very good delivery. So if you get to understand delivery in the market, trust me, this bullish candlestick will not tell you that the market wants to buy. You get to understand delivery, not chasing candlestick like, okay, this is a bullish candlestick, the market is going to go to the moon. No, once you understand delivering, you get to know that this is a point for you to start shorting the market. Now, let me take you guys to the bullish scenario. This is a trade I also took on the good market during April, I think last month. Okay, last month was April, and this is me making this video. First off, we see that the market give us a flip zone, which you can call it a breaker block or a fade level. We can see a lot of short positions around here, that a lot of people are trying to short this market, but when the big boys get to step into the market with their huge funds, they left out what? A fair value gap, because there's a lot of orders right here that they need to come back to filling. So this candle has a lot of volume, a lot of money inside compared to these smaller candles right here. So after then, we see how the market moved to the upside, gave us our liquidity right here, break structure. Market came exactly and precisely into our fair value gap, and we get to milk this market to the upside. Now, this is also another entry that we took right here, but we went down to the 3-minute time frame to see that if here is a region that a lot of people wants to start selling, because I mean, they get to understand candlestick that this is a bearish candlesticks to the downside, and the market should keep going bearish. But the big boys pull out a fair value gap right here, which they want to come back and fill in those orders. So as soon as they're coming back, we are joining them right here. And this is the liquidity that they swept. And this is where we join the big boys and we swing this move to the upside. So you can see that once you get to understand delivery in the market, you will not be chasing candlestick. I'm not saying candlestick is bad. I'm not bad-mouthing people that are trading candlestick patterns and all that. All I'm saying is that when you're using the hybrid system on the type 2 entry, you should get to understand one thing first: delivering in the market. You get to read inside every break of market structure, every structural liquidity, every order blocks, every fair value gap, every breaker block has a story to tell you, has a purpose to play in your type 2 entry model. So now you've seen how I combine the fair value gap and also the breaker block and also a momentum into one continuation model, which I call my type 2 entry model. Trading become more easier once you stop chasing candles and start understanding delivery. I can't overemphasize what I mean by start understanding delivery. In my next video, guys, I'm going to be going deeper into the liquidity and also how I refine those entry, manage risks, and execute with precision on a funded account. Now, if you've been following this series from the beginning, you already know, guys, that we are currently building something serious right here. So if you like what we're doing right here, please don't forget to hit that subscribe button, and I'm going to see you on the next episode. Peace and love, guys.